Okay, thank you very much. I welcome everyone to this section. It's risk management section. It's titled "Risk Management is Everyone's Business." Okay, okay. As a second speaker for today, please, I hope you can see my screen.
Yes, we can.
Okay.
Thank you. Yes, we can.
Oh, thank you very much, sir. First and foremost, I actually want to appreciate Mr. Femi for this opportunity, and at the same time, he has said almost everything. But notwithstanding, we'll look into one or two areas that I think risk management is very key and important for us as business owners. So, because risk management is not just one person's business, it's everybody's business. And this actually makes me love the title of the section. Risk management is everybody's business. And I think these are my agenda, and I don't really want to dwell too much on them. They are just four, and they are not going to be more than four. Also, I have the key one I want to talk about: key business objective in risk management, the survey on impact of risk management to corporate business, the role of data analytics in risk management, and the last one: top 10 global risk outlook for business owners to keep an eye on, to watch, so that they can as well stay ahead, be ahead. If you don't stay ahead in terms of being proactive, you will not be ahead of all the uncertainty that are likely to happen. We only know of the present. The present is the only thing that is versatile, that is volatile. But the future, the only thing that can help the future is risk management. So let's go. So this on key business objectives in risk management, I will say that normally for every business we have what we call inherent risk, and this inherent risk are the true nature of the business. It's just like having a car. You take your car out there outside, you actually want to embark on a journey, and you decide not to press brake. You just want to keep on accelerating. It's not possible. You have to press the brake, apply the brake when you need to what? To apply. So every business has inherent risk. And you apply the brake, which is the control when it is time to do that. Okay. So bringing risk management into this is you having a business that you can now bring in risk management to help mitigate any form of risk, potential risk that can happen in the future. Risk are threats to business. They are uncertainty, and it has both impact and what? And likelihood. So every business has inherent risk, and these are the activities that happen. Now take for instance a business that gives credit facility to its customers or its clients. What are the likely risk there? Default in payment of what? Of loans. You understand? It might be due to maybe inability of the customer to what? To pay. So business needs to come up with policies to manage all those risks, because naturally the business, there are going to be debtors. There are going to be people that will what? That will come in, learn from the business, and are not does not have the capability to pay at a particular point in time. So coming up with risk management, bringing risk management into it will make this level of risk to be reduced with what? With policies. While companies can learn how to mitigate their risk so that they are able to meet their goals. And the major objective of every business is to maximize profit. Most times we read in our textbooks or we hear is to make profit. I think making profit now, that is now for the 90s or 80s. Now in this 21st century, it is for business to maximize their profit. If they can even triple it, if it can come up 10 times, let's go ahead. Yeah, it should go, because no business wants to keep incurring costs. Cost must be what? Optimized. why um, 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 the profit being what maximized. So that is it. And also, when we look at this very well, we will look at risk management in two parts. That is the internal risk management and external. The internal, which Mr. Femi has talked about, which is talking about the management of the staff, the operational activities generally. The IT is there, the compliance, the internal control and audit, the business units itself as well as a whole. Also, the customer service that interface with what? With customers. And even at this particular junction now, the customer service, which is actually the most essential and fundamental part of every business, some business owners are not taking care of the risk, major risk coming from that angle. There are a lot of risk coming from the customer service department, because I can tell you that there are some business currently now, they don't even have a risk register, not to talk of having customer complaint register. So when you have a customer complaint register, you can document every complaint, because for customer to make their complaint, it still shows that they have interest in the business as what? As a key stakeholder. As a key stakeholder, customers have interest in the business and they are making complaints, and you think maybe their complaints just getting too much. No problem. There are other there are competitors out there that will take over, and there are no new customers anyway. That's what we need to know. There are no new customers anyway. So in meeting the business objective, there must be a thorough look, watch for every form of risk in each department. And when you look at the traditional risk management, the TRM, and the enterprise, the traditional is just fully focused on just one area or one department. Ah, it is anything that is happening to my business, to my own department, I'll look at. It is very, very reactive. It's not proactive. That's for the TRM, traditional risk management. But for the enterprise, is as a whole holistic aspect of the business is being taken care of here, because the TRM is reactive and you say, okay, this particular risk, I'll rather identify my own and try to mitigate it. I'm not even looking after maybe there's a potential new risk that might occur. But for enterprise risk management, the current risk will be dealt with, which are the existing ones, and the potential risk as well. So we take care of the current and the futuristic aspect of the business. That's the difference between the ERM and the TRM, which is the traditional what? Risk management. So it is very important that business owners inculcate the habit of everybody, even up to the janitors, that every one of them, they take what? They take responsibility, they take ownership of what is called risk management in the business. It has gone beyond, did you know that this thing is risky? No, it has gone beyond that level. The level is now for everyone. There should be what we call brainstorming in the business. That quarterly brainstorming, monthly brainstorming, the key management staff, the monthly reports, the monthly meetings, brainstorm. What are the challenges? Because these are the areas that things can work with. And you know now, there are investors that are very, very investors now. They want to know how safe their money is. How will I come to your business? I invest my funds. I invest everything I've worked for almost all my life into your business, and you are telling me that because wire sparked somewhere and the whole thing in the business is gone. No. So that's what brought about ESG, the environmental, social, and governance, because there are some investors that are socially concerned about what the environment of this business. So the smart investors we have now, they don't just want to go in there and invest into any business, but they want to be sure that this business is taking the right step to mitigate risk on regular basis. On regular basis, how socially inclined they are, what are the policies they are addressing, are they keeping to regulatory issues? Are they tackling them? When we look at regulators into terms of compliance, by next year 2024, that is when business owners will know where we are heading to, because everything now currently is clouded. We don't know what we are expecting. Even the exchange rate, right? We don't know what we are expecting. So if business fail to plan, hmm, there is what I call high risk and high cost at the end of the day. If business fail to plan, then they definitely, a lot of things will go wrong. So for the HR, for each unit, they need to what? Take care of risk management as a whole. As a whole. So for the customer service unit, as I've said again, customer service unit, one of the key and the biggest brand in the world, which is Apple, they don't joke with customers' feedback, and they use the same customers' feedback to what? To improve their what? Their service, to improve their products that they sell. So that is just it. Customer will come up with it. That's why you see most of this application we use. It pops up a customer's experience. Are you okay with this app? You click. All those things you are clicking, you are sending a feedback to the company, to that business, that okay, this is my own what concern, this is my own grievance, this is the area which I have issues. If you tap in good, wow, so we have about 30% that have tapped in, not satisfied, and we have about 70% that are satisfied. Fantastic. So they can know how their customers and clients, how they feel about their applications. So that is that. So the business, the world is moving. Business owners need to move as well as things are moving. And next year comes with a whole lot of activities that's going to start commencing. A lot of regulatory issues will be coming up, and business that are not proactive enough will might likely fall into the pit. And with this current administration, any business will be hit with fines, with appropriate fines. Business will take a whole lot of hit with fines. So now, when you are being fined here and there, then what is remaining? Well, what's remaining? What's left from the little income or revenue? The business is being fined on a regular basis. There's what's left. So this now takes me to my next slide, which is impact of risk management. When we look at this, business that have been able to spend less than 10 million to invest in risk management, have 84% growth. 84% growth. And this is a data from Deloitte, a survey on risk management. It said company that has invested about 10 million US dollars, less than 10 million US dollars, just less than 10 million US dollars. And we even have in Nigeria, you can even invest less than 500,000, less than 400,000, less than 300,000 in risk management, and you will still achieve your goal. You will still achieve your goal. So we have 84%, we have 16. Those that need not invest at all, 16%. Those that invest more than 10%, they have 96, more than 10 million US dollars, they have 96%, and those that did not even invest at all, they have 4%. So these are Deloitte survey on the impact of risk management to corporate business. This is a survey. So you can see how positive it is if you take proactive steps to invest into your business, either your SMEs, invest into your business risk management. My business is too small, it cannot tolerate risk management, I don't have much money. There are consulting firms that will come with a framework that will help to modernize what your business model is actually speaking about. That is, they come up with a model to help your business. Because if you're not making up to 500,000 naira, we can't tell you to come and you know invest in risk management of 1 million or 2.5 million. We have risk management of 2.5 million, yes, in this current world, depending on the class and the level of what? Of risk management. So we come in to help you. They are called business professional consultants. They are business professional consultants to help you with your business model. We take care of that part, and the framework will give to you is going to help reduce, manage, assess all your risk, and you'll be happy. Of recent, there's a particular audit I did, and when I finished the audit for the company, I noticed that the level of debt they have was so huge. And I asked, when last have you been able to get in touch with these debtors? I got comments about, like, some said 6 months ago, some said 7 months ago, and you are still in business. And the funniest aspect of it, listeners, the funniest aspect of it is that about 25 to 30 million, and we were just wrapping down, closing down to December, November period, and the likes. I said, okay, now that you don't even know the current state, they gave me an estimate. They don't even know the total debt the debtors are owing the business. I said, what kind of risk is this? Such a high risk. They fail to keep notifying the debtors on the current status of their debt, the level, 2 million, 3 million, thereabout, for the 8 different companies. And majority of people that are patronizing the business, they are people that they are competitors. They are in the same line. But due to the special order this particular business gives out, and the quality of service, they tend to patronize that particular business. Competitors are coming to buy, but competitors don't want that business to survive, because the amount of debt alone can bring down that business. That is a risk of what? Bad debt. And I will ask, is there anything like credit liability in this business? Is there any form of credit insurance, rather, credit insurance that the business has actually done? Ah, they told me, they said no. Really? What of liability insurance? They said no. And you can allow such amount of money to be out there, and the business owners were looking without taking any proactive step. At the end of the day, we will now complain that there is no money, that some business cannot sustain again. There are a lot of businesses that could not meet up after COVID. Some companies died in the midst of COVID. Some company up to now, they are still struggling. Some companies that are surviving, some companies are dead. Some companies now, they were able to sustain themselves during the COVID period. And from that, they were able to attract customers from their competitors back to themselves. So that is it. So if business owner fail to take proactive step, competitors will use that as what? As an opportunity for them to what? To channel that into their own business, and they have more what? Customer. That's why I said there are no new customers anyway. We'll keep on snatching customers from ourselves. This application, and you can see what fintech is doing now currently. Fintech now want to even take over as if they are now commercial banks. I can go on now to one of these applications now. I get my loan, they attend to me. I don't need to wait for 7 days before any consult, any business out there, or any company that can give me a credit facility approve my loan of maybe 10 million naira or thereabout, or lease. So they can just look at it from their hand. They can assess me, they can profile me, they can rate me. They've seen all what I've been able to present, and they can quickly decide and make their decision if I am credit worthy enough to be given such amount of loan or not. So it is left for business owners to think ahead, look ahead of the threat. Increasing competition is just coming here and there. So it is very important business owners take proactive steps, do risk management, get a professional risk management consulting firm to come into your business, give you a model that can synchronize everything you do in your business. It's not necessarily until you pay a million, not necessarily until you pay 5 billion or million or thereabout, but according to your capacity and capability. So that takes me quickly to the role of data analytics in risk management, so that I can quickly wrap up. Yes, we have one, a fraud identification. Data analytics now is one of the very key innovative technology out there now. People don't want to be seeing disturbing figures, grand totals, and the likes. I'm not interested. Of recent, I did credit data analysis, and as well financial ratio for a particular consulting firm that I also consult for. But what I'm saying is this about 45 slides or thereabout, everything has been synchronized to maybe just 15 slides or 12. The summary of what is in the what management account. I can just summarize. I can give them the ROL. I can give them a lot of things. I can give them their all the if the business is stable, the current ratio, and the likes. All the ratios in what in financial ratios can be given to them, liquidity, and the likes. So it's very important. So it can identify fraud, data driven decision making. It tells the financial health of the business. That is the basic thing a financial ratio does. Any investors now will want to look at the financial health of your what? Of your business. Even if there are a lot of window dressing, there are a lot of window dressing in financial statements. A lot of window dressing. What is being reviewed and disclosed in the financial statement is not the true value or the worth of the business. There are a lot of window dressing. But nevertheless, proactive investors too will make sure they do a deep findings in order not to fall into the pit. Because once you now invest, that's when you now start seeing the loopholes, the loopholes within the what the business you are a shareholder or part of. So operating cost optimization, it helps improving capital efficiency, prevention of repetitive loss. So, and the last one which I'm going to talk about is going to be top 10 global risk outlook for business organization. In order to stay ahead, you just have to stay ahead, either you like it or not. Cyber security and cyber attacks or data breach will continue. It will continue. When I was doing a risk management exercise for a particular firm, I came in for control validation, and I was seeing confidential documents flying around the tables. And I told them, I said, even coming to this business unit alone, there are a lot of risk I've been able to identify. They were shocked. And I started raising them. I think I raised about three or thereabouts on that particular day. Laptops are being opened, laptops are not being locked, and anybody can come in. So, these are the things we talk about. Even work from home now is a whole lot of risk. It still talks about the cyber security attack. Your visitor can come in, anybody can come in, strangers can come in, and you leave your laptop open. Cyber security attack, data breach can happen. And if this happens, it will lead to what? Damage to brand or reputation. Instantly, those two they work hand in hand. Once the cyber attack or data breach happens, it is going to directly affect damage to brand or reputation. That is the end. And the business will now start struggling. Now the business will not be dealing with sustainability, irrespective of what might be happening in the economy. The business will now start struggling to maintain their reputation. And one thing about reputation is like trust. Once it is gone, it is very difficult before you can regain it. So that is why. So we look at business interruption. A lot of business interruption will come in due to slow down or slow recovery of the economy, the inflation rate, the MPR, the interest rates. Business interruption will come. The COVID period, we know what we faced. The Ukraine war is still affecting a whole lot of business. It's still affecting. Failure to attract and retain talent, the jackpot syndrome, what it has caused. HR keep lamenting, oh, I have a lot of work to do. I have 10 employees, potential employees. I want to, I want to do interview for and the likes. And the funny thing about this failure to attract or retain talent is that the cost of of acquiring a new employee is more than retaining them. So why will you not buy into the ideas of your employees? Do brainstorm, let them contribute into the business. They have ideas. Send out survey within the business to every individual. Let them contribute. They have a say. Either the business will make use of it or not, but let them know that they have an impact. Let them know that they also have a say. And by the time their ideas are now being used, it is very good. The business owners now what try to let them know that, recognize them. That's recognition. Oh, so person gave us this idea in order to do this, and now it's really working. So we need to recognize them. We need to that these are one of the ways to retain talent, because when we talk about the high turnover rate and businesses now is so high, HR will just keep telling you that it's moderate, we are managing. They are not managing anything. It is so high, and you can't. You just like, what's happening? Huh? In a particular business, I've seen about six staff leave for a good 2 months. Six staffs, two, and those staff that actually they are not maybe support, maybe team just team members. No, they are team leads. About four. The other two are, so the way it is. And this failure to attract retain talent, if business owner does not handle it very well, it now leads to one man risk. Having one person to do the whole task without delegating is a whole lot of risk. So it's very good you have versatile employees. So if Mr. A is not around, Mr. B can as well support. So regulatory or legislative changes next year, we can there is no escape in terms of what the regulators will do. CBN are coming for the finance house and the likes. So, and we have the supply chain or distribution. Supply chain, that's one of the major key issues now. We have the manufacturing companies. They will tell you, this product, we don't have raw materials. We don't have raw materials, and before you know, the little one they are able to get, they hike the price. What happens? The consumers, they bear the burden. Distributors too, they raise it up. Consumers will now bear the burden. Just take for instance the Coca-Cola we buy for 100 naira is now 300 naira, 200 naira difference. As at last year, most of the things we were able to buy conveniently, now we are paying double. That is the impact of inflation on the economy, on every individual. Is affecting the business owners. And despite this, businesses are what? Some businesses are still coming up. Businesses are still thriving. It now depends on how business owners what? Manage their risk. Failure to innovate or retain clients is either once you fail to innovate, the competitors are ready to what? To take away your clients. If you fail to innovate, of recent, someone was telling me that the major reason why we have been having issues because we take 7 days before we will reply our clients, and due to the fact that we don't have so people on ground that will attend to them so that they can have what they actually ask. And I was like, what was happening? Did you know that other competitors will have that thing in place, and by so doing, it will not even make the business be able to achieve its basic revenue. You understand? Because for every business, there's what we call target. So, and at that moment, the lady just looked at me and said, "Oh," I said, "Yes." So this is a big risk. At the end of the day, you lose customers to other competitors, and they because they will be able to answer them. Now we are no longer in the century of come back tomorrow. No, they attend to you 1 hour, 2 hours. Take whatever you want, you go, and you now have another business telling you to come back 7 days. So why will I come back 7 days when I have a whole lot of things to do? Because time is money. So, and the last one is increasing competition. The competition out there is is so much, is so high. If you fail to innovate, competitors will take over all your customers. And as I've said, there are no new customers out there. There are no new customers. So, what I would say in conclusion is that business owners take proactive risk management techniques by getting a good professionals to come and look into your business, that in diverse ways they can help to help you in risk management. Risk management is changing the world right now. Business owners, you can't be left behind. Thank you.